Good afternoon.
Mr. Makola. Yeah, good afternoon, Marwa.
Yeah, good afternoon. Yeah. All right. Because they are not responding, they are muted.
Okay.
Now I got this. Now it's okay.
Okay.
I'll start.
Okay, start, Papa.
Good afternoon. My name is Seacheng Simon Makola. I welcome you again on this lecture, Lpbk, for accounting for legal professionals. I've asked Dorcas to send you this particular exercise in front of you because of what we have gone through yesterday, and we must apologize for the technical issues that we experienced before we started yesterday. We hope today's lecture will just flow. And then perhaps after going through this particular exercise, that's when perhaps you'll be muted and then you'll be unmuted, and then perhaps we can discuss it further. The reason you are muted, I can't hear you, is because yesterday there were disturbances. Some of you have complained, saying that there were some of yourselves, the candidates who had background interfering noises, hence they couldn't hear properly. This particular exercise, I have prepared it today because of what I heard while I was discussing with you yesterday. Some of you having not done accounting before, I just want to show you through as to the debit and credit, after which we'll go to the exercises that were sent by Dorcas 2 days ago. But this one will give you a good understanding, background of double entry system, and the books of prime entry, the cash book, and the fees journal, and the ledger. After which, I think you'll have a better understanding of how to do the exercise that we'll be doing in the future. It says a long arm, a newly qualified and admitted attorney started his own practice on the 1st of February 2020. On that day, he opens a bank account by depositing 30,000 he got as a gift from his family. That's where he starts. He starts a practice. He has 30,000 rand cash, and he has to deposit in an account. And the question is, what needs to happen from here? Because he opens a bank account, what needs to happen? It means that he has to record this 30,000 rand in his cash book. He has to record it in his cash book. Now, these are the drawings specifically for the cash book. I hope you have a copy of this particular exercise. It's a long cash book. Ladies and gentlemen, it's a business cash book because he deposits his own money in this particular undertaking. This side is a debit side. This side is a credit side. It means that the business of a long practice of attorneys receives an amount of 30,000 rand from the owner, he himself. He received 30,000 rand for the practice. All receipt for the business, you deposit on the debit side, but it's because it's his own money. It's his capital. That's capital. with this in mind, if he opens it, it's a capital like that, then there is another account that needs to be open. It should be a capital account. I will do the same capital account on the same spreadsheet here. This is a capital account or the owner's account. You debit one side, then you credit the other side with the same amount of money that he has deposited in the business. And then it's from the bank or cash book. Cash book. That's the double entry system. You receive money into the business, 30,000 rand, and then he opens his own practice, then it's his own capital. Having opened the bank account with the bank, he also transferred to the practice his private collection of law books he used at university. The value of those books that he used are valued at 2,000. Now he has books, and this particular books of law book collection of law books he donates to this business. It's also his contribution. The value of the books is 2,000 rand. The question is which other accounts are involved here. He starts a library. And he donates the book. The books are an asset. They are an asset for the establishment. What we can do in this case, we have to open, as you can imagine, there's no flow of money as far as the books are concerned. There is no flow of money. It's just the books that he is donating for the business. Because there's no flow of money, the cash book is not involved. We have to open a journal where he deposits the books. Let's call this a general journal. General journal is a credit side and is a debit side of the business or the practice. The general journal. In the general journal, he contributes with his books. The value of the books are 2,000. 2,000 is an asset for the business. 2,000 an asset in the business in a form of the books or law, or he forms a law library. The law library or the books of the business are debited with an amount of 2,000 rand because there's no flow of money here. Another account should be credited because it's his own contribution. It's also capital. And then we credit capital. An amount of 2,000. And then narration, we say contribution to the law library, You see, this is a journal entry. At some point in time, we will post this journal entry. It will go to the ledger. But for now, we leave it at that. We'll come to the posting later on. He hires a secretary at the weekly wage of 200 rands a week. The only thing is that it's a contract. He hired a secretary to help him in his business. Nothing needs to flow because there's no flow of money or anything. It's just a contract that is signed with a secretary. The bank simultaneously opened for Mr. Long a trust account as per the Law Practice Council's requirement, and he deposits 1,000 in the trust account. Still on the same day, after opening a practice, he opens a trust account and he deposits 1,000 in a trust account. That is just an account, trust account as per the requirements of the Law Practice Council. Because he's deposited money now, and the account is it's a trust account. We open a trust cash book. Trust cash book. Imagine you just have to have a minimum amount of money in your trust account as per the requirements. Now is a trust cash book. The trust cash book received $1,000. The trust cash book received $1,000. Which other account is involved here? It's his own money. This 1,000 is just to maintain a credit balance or a positive balance in his trust cash book for the purpose of the practice. You can't have a trust account which is empty. And then this is also a part of his money. Within the trust ledger also, we can open a capital account again. Ladies and gentlemen, I'm opening it here in the same, because we don't have to mix the trust, the documents from the trust ledger and the documents from the business ledger. Hence, this is part of the capital that is deposited. It is just so that the account is there. Trust cash book, an amount of 1,000 rand, and then the capital. I didn't take it into the general ledger for the business because usually the trust ledger and business ledger books shouldn't mix. They should be separated. Hence, the capital. This is just a maintenance. There won't be any activity in this trust, in the trust capital, in this capital account, in the trust, in his books of trust, in the trust ledger. You debit one account, you credit the other one. It's capital. That's the trust cash book. You just maintain that amount of money. It's still his money in this case. It doesn't belong to any of the trust creditors. During February 2020, he enters into the following transactions. On February the 1st, he invests 600 of the cash in the bank in a savings account with an interest of 10% per annum. Out of that amount he invested in the bank, he moves 600 into a savings account out of the bank account. This is a trust cash book. It's a movement of cash. It means that he opens a savings account out of this. Then it says savings account. He transfers money from the trust cash books. It's like a payment, an amount of 1,000 rand or 600 rands. He opened a savings account. You credit the bank account or the cash book. And you debit the savings account. 600 rands is from the business cash book. Or you can write bank there, 600 rands. You debit the cash book an amount of 600 rands gets out of the business cash book account, it goes into the savings account. On the same day, the 1st of February, he pays rent for February, March, and April, an amount of 1,200. He pays towards the rental for the business. Having hired those offices, he pays rental for 1,200. It means that for each month, it's like 400 rands rental per month. Then he pays out of the cash book rental paid or rent paid, an amount of 1,200. Once you debit one, credit one account, because that's where he pays out of his bank account. Then we open an expense account. It's called the rent account. It is an expense account. It's a rental account. It's from the bank or the cash book, an amount of 1,200. Rental, you credit the cash book with 1,200 having paid rent, and 1,200 rent paid towards rental. You credit the rental account. This is an expense account. It's an expense account. Rental. It's like stationery. If he has to buy stationery, the one will open a stationery account, which will also have a debit balance. On the 2nd of February, he buys office furniture to the value of 3,000 by using a check card linked to the practice account. It's the same as a check or an EFT. He buys an office computer for the business. It's also a flow of cash. He uses cash to acquire this equipment, the computer equipment. Then we open the computer equipment account or equipment account. Computer equipment. Credit. He buys this computer for cash. Out of the business cash book also, he pays computer equipment for computer equipment. Computer equipment, 3,000 rand. Now he has an asset in the business. The asset is called the computer equipment. Then in the computer equipment is credited from the bank or the cash book, an amount of 3,000 rand. You have computer equipment to the value of 3,000 rand. The value of the cash that he had in the business has decreased by the same 3,000 rand. 3,000 rand buying equipment, and it comes to the equipment account, computer equipment account, the bank or cash, an amount of 3,000 rand. On the 3rd of February, he purchases stationery on credit from Joburg Printers for 1,400. He buys stationery for the business, 1,400 on credit from Joburg Printers. There's no flow of money. The cash book is not involved here. There's no cash book involved. Then we come to the journal. To the journal. What does it say? The question, it says, he purchases stationery on credit from Joburg Printers for 1,400. Joburg Printers, our Mr. Long Arms creditors. How is it recorded here? Because it's not a flow of cash. It's a credit transaction. We use the journal to record it. It's a general journal in this case. We credit stationery. Stationery account is debited. Stationery is debited with an amount of 1,400. He bought the stationery from Joburg Printers. Joburg Printers are credited. Joburg Printers, an amount of 1,400. They are a creditor. That's how we record a credit transaction. A credit transaction, we record it in the journal. And then we say stationery bought on credit. That's the narration. Stationery bought on credit, 1,400. Now coming to the next transaction. And then upon completion of a legal assignment for a client, he received a fee of 700 rands. He received a fee of 700 rands. He consulted with a client and he has done some kind of an assignment, and he received 700 rand for that consultation and that particular assignment he has done for his business. Now here you can see that there is a flow of cash. He received cash of 700 rand. All receipts for the business are deposited in the cash book. This is A Long's cash book. He receives fees. It's not on credit. Fees of 700 rands. And then we have to credit the fees account. You debit the cash book. He receives 700 rand for the practice. An amount of 700 received for the practice. Now we have to credit the fees account. We have to open a fees account. A fees account. Then you have a fees account in a general ledger of the business, A Long credit side, the debit side. You say bank or cash book, an amount of 700 rands. The fees account, you credit the fees account. All our fees, when we receive fees as a business, is an income, is credited. You see, the fees are an income is credited. And when you spend money, money flows out of the bank account. It's an expense, like you bought stationery. Once you consume the stationery, it becomes an expense. And then that particular stationery, it has a debit balance. Whereas the fees, 700 rands is a credit balance. You have earned fees, 700 rands. And then the money has gone into our bank account, into our bank account, an amount of 700 rands. There's a 700 rand for the fees. On the 7th, he pays wages for the week, an amount of 200 rands. wages for the week for a number of 200 rands. On the 7th, in his cash book, we record wages. He paid wages for 200 rands, which is an expense for the business. And we open a wages account. We open a wages account. Credit, debit, wages. He paid the wages out of the bank account or cash book, an amount of 200 rands in the wages account, 200 rands. On the 8th, Mr. Apple pays an amount of 10,000 rand into the trust bank account of the practice for his divorce. A certain Mr. Apple pays an amount of 10,000 rand into the trust bank account of the practice for his divorce. Remember, the business has a trust bank account. It also has a business bank account. Now, this is a trust bank account. A client pays directly into the trust cash book. No work has been done for Mr. Apple. Then we receive this amount from A Apple Trust. We're still holding that money in trust for him, an amount of 10,000 rand. In the trust ledger, this is a trust cash book. We receive 10,000 rand from this client. If we receive in trust this amount of money, you debit the trust cash book, and then we have to credit another account in the trust ledger. Credit, debit, Mr. A Apple Trust. What does it mean? It means that until we do some kind of a legal work for him, we are holding in trust for Mr. A Apple an amount of 10,000 rand from the trust cash book. You credit the trust bank account. You debit the trust bank account, and you credit Mr. A Apple. We are holding in trust for him an amount of 10,000 rand until some kind of a legal work is done for him. On the 14th, he pays wages for the second week for an amount of 200 rands again. Out of A longs, this was on the 7th, and on the 14th, wages, an amount of 200 rands. You credit the bank account because we pay out of the bank account an amount of 200 rand for wages. We go into the wages account on the 14th. From the bank, we paid 200 rands the second week. On the 15th, he completes an assignment for Omega Builders and invoice them for a fee of 8,000 rand. There's a debit note number. He has done some kind of a legal assignment for Omega Builders, and he issues an invoice for 8,000 rand. It's just an invoice. There's no flow of cash or money that side. Then we go to the journal. In this case, because we have done an assignment, we have invoiced them, we have to open a fees journal. A fees journal. We open a fees journal. It's not a general journal, it's called a fees journal. That's where we account for our fees. Fees journal. Is a debit side and the credit side of the fees journal. The fees journal, it's Omega Builders. They say Omega Builders, they has done an assignment. Completes an assignment for Omega Builders, the invoice is 8,000 rand for. Now, Omega Builders become a debtor of the business. We debit Omega Builders. R8,000. They owe the business 8,000 rand. And then we credit the fees. The fees, the business has earned fees of 8,000 rand, but not yet received. They are just earned. It's a debtor in our business. You just say fees earned or something like that. Fees earned. An amount of 8,000 rand for the fees. On the 16th, Mr. A Long withdraws 500 for own personal use from the practice bank account. He draws money from because it's his own practice. He draws money out of the business of the practice. Then we go to the cash book. In the cash book, by drawing cash out of the business, we call it drawings. Drawings, an amount of 500 rands. He draws 500 rands, and then we open a new account. A new account is called drawings account. We open a new account. It's called drawings. The debit side, the credit side, and then drawings. Drawings. An amount of 500 rands. That 500 rands drawing. So the money can come out of the business account, business cash book. It comes into drawings, an amount of 500 rand out of the bank account. 500 rands drawings. We debit drawings, we credit the cash book. On the 21st, he pays wages for the week for an amount of 200 rand. Wages again. The third week, wages 200 rands. We come to the wages account, credit wages account from the bank, an amount of 200 rands. We shall have recorded the date there, the 21st. Also in your bank account, the 21st. Wages 200 rands. On the 22nd, Mr. Longarm wrote a letter to attorneys representing Mrs. April and invoices Mr. April an amount of 2,000 rand for having written a divorce-related matter letter for 2,000 rand. Mr. Long wrote a letter to the attorneys representing the wife of Mr. April and invoices Mr. April an amount of 2,000 rand what needs to happen here is that he has done work for Mr. Apple by writing a letter. Now we have to go to the fees journal again. In the fees journal, what happens? He earns fees of 2,000 rand by writing that particular legal letter. He debit Mr. Apple. Mr. Apple becomes a debtor, an amount of 2,000 rand. And then he credit fees, an amount of 2,000 rand. And the narration is that fees end. Fees end from Mr. Apple, an amount of 2,000. It's a journal. It's a fees journal. In the fees journal, specifically because it's a fees, it comes into the fees journal specifically for the fees. Doesn't go to any other journal but the fees journal. We have a number of journals in legal practice. We have the fees journal. We have the transfer journal. We do have a general journal. Those are some of the journals that we have as books of prime entry in a legal practice. Here, it's a fees journal. On the 23rd of the month, Omega Builders, they pay 400 rand for their account by EFT. You remember Omega Builders on the 15th? There was an assignment for them, and then a debit note was issued, an invoice was issued. They owe the business 800 rands, 8,000 rands. Now on the 23rd, Omega Builders pay half of that amount for their account. Because we receive money, when we receive money, the cash book, business cash book is involved. We receive money from Omega Builders. We debit the bank account by receiving an amount of 4,000 rand. And we have to credit another account. You remember in we open another account. We haven't opened an account for Omega Builders. Because we received from Omega Builders, we open an account called Omega Builders. Omega Builders, we receive from them an amount of 4,000 rand. This amount has been deposited in the bank. Ladies and gentlemen, I'm just thinking here, you remember we credited the fees journal with 8,000 rand for fees that have been earned for having performed an assignment for Omega Builders. We credited, but it's in the journal. We haven't posted from the journal into our general ledger as yet. After this, that's when I will show you how to post from the journal into the ledger. Omega Builders, they paid us an amount. It looks like as if they owe us, but in actual fact, when we post, we're coming to post this side what they owe us, which is 8,000 rand. Then you will see that there were our data in the practice, and hence you shouldn't worry about this for now. On the 24th, the practice pays 500 on account to Joburg printers by EFT. There's a voucher number. They pay on account to Joburg printers who sold us stationery. It's our creditor. We owe Joburg printers an amount, a certain amount. Now we pay them 500 rands. What happens? As long as there's a flow of money, the cash book is involved. In the cash book, we say, who are these guys? Joburg printers. Joburg printers. We pay Joburg printers. Printers. An amount of 500 rands. And then we debit we credit the cash book, which is a payment. And then we have to credit Omega. We have to debit Omega builders. I beg your pardon, Joburg printers. In the Joburg printers account, there is an account called Joburg printers, credit and debit, Joburg printers, who have paid them an amount of 500 rands from the bank or cash book. 500 rand, we have paid Joburg printers. We credited the bank. We credited the bank account. And we debit Joburg printers with 500 rands. What I'm going through and showing you, ladies and gentlemen, is a double entry system. How we handle a double entry system, especially those who haven't done accounting during their LLB or they have done it a long time ago, and then just to refresh. Some of this you should have gone through your guides, and then you should be able to do the debit and credit. Anyway, but after yesterday's session, I thought let me go through this with you just so that you could catch up. Some of those of you could catch up. On the 26th, the practice, Mr. A. Longarm contracts with Pretoria Building Society to render professional legal service for a fixed monthly retainer of 500 rands. On the same day, the Building Society pays an amount of 500 for the March retainer. Now the business receives money also. All money received by the business goes into the bank account. What has the practice received? In the A-long cash book, we received an amount of 500 rands, which is a retainer. This retainer, it comes from Pretoria Building Society as one of our clients. Is a retainer, ladies and gentlemen. It means it's part of the fees. We receive fees in bracket is from Pretoria Building Society. R500. We debit the bank account and we credit the fees, because these fees we have earned them by signing that particular contract. In the fees account, bank, an amount of 500 rand. without complicating things. I don't want, somebody would have said that why don't we credit the trust account of this particular company, Pretoria Building Society Trust Fund. This is not money invested for trust. There is a contract that has been signed between the practice and this particular building society, and then they pay a retainer. Immediately the retainer is paid. It's a fees for the business. And then if there is a matter at some point in time, then they'll brief us. Then we will do some legal matters for them. But this is end. It's end. It's not retained as trust money. It's what has been earned based on the contract that has been signed. On the 27th, we paid telephone account by EFT 400 rands. Pay telephone account. We come to telephone. Also in the cash book, we pay through EFT telephone, which is an expense for the business, an amount of 400 rands. And then in a telephone account, we open a telephone account. Telephone account, the bank, or a cash book, an amount of 400 rands. You debit one account, you credit the other account. They said we should record these accounts in the books of account. We have recorded all the accounts in our books. But at the end of the month, what needs to be done is, because we have a number of journals, we have to post from the journal to bring them into the ledger account. I can start with the fees journal. You see, in the fees journal, we have Omega Builders, 8,000 rand, and we have end fees of 8,000 rand. We have end fees. Now, having to post these two transactions into the ledger, we have to check Omega Builders account and the fees account. There's Omega Builders account. Now we have to post. The posting says that we debit Omega Builders with 8,000 rand. We credit fees with 8,000 rand. That's what we need to do. When we post from the journal, we post into the ledger. Here is the ledger account of Omega Builders. Omega Builders has to be debited with 8,000 rand. Omega Builders fees. Exactly what we have done here is debited with 8,000 rand, 8,000 rand. And then we go into the fees account with the same amount of money. Here is the fees account. The fees account, we debited Omega Builders with 8,000 rand. And we have to credit the fees. In the fees account, you say Omega Builders. 8,000 rand. This is posting. We are posting from the journal. We're posting into the ledger. Also in the fees journal again, we have a Mr. Apple. And then we have fees of 2,000 rand. Now we post from here. We have to debit Mr. Apple and credit the fees. Let me start with the fees. The fees, Mr. Apple. Mr. Apple, the fees are credited with, we credit the fees with 2,000 Rand. 2,000 Rand in the ledger. We post from the journal into the ledger. And then we have to find Mr. Apple's account. Mr. Apple's business account. You remember Mr. Apple deposited money in the trust account so that we can do a divorce for him. We'll come as to how to deal with that. Mr. Apple is debited with 2,000 and he owes the business 2,000 Rand for services rendered. The business has earned 2,000 Rand. Mr. Apple owes the business 2,000 Rand. Fees. I've already credited fees with Mr. Apple, 2,000 Rand there, the fees account. We've posted from the fees journal, we've posted into the ledger. And then we have other kind of the general journal. There is a general journal. The general journal from the general journal we had the capital of the we have opened a library which were donated by the owner into the business. The value of the books for the library is 2,000 Rand. And then because it's injection from the owner's capital has been credited with 2,000 Rand. Now, if we have to post from here, we post into the ledger. First, it starts with the capital account. Here is our capital account. The capital account has only the 30,000 Rand that he has deposited earlier. Now having to post, we have to credit capital with 2,000 Rand. The capital account, we credit with 2,000 Rand. £2,000 or law library for the business. And then when another account has to be debited, we open that asset account. The asset account it's a library type account. We open another asset account, credit, debit. The library of the practice has books to the value of 2,000 Rand from capital. The owner has contributed. You debit the law library, which is an asset. You credit the capital of the ownership. That's where ownership rests. That's what he invested in the business, 32,000 Rand. In a way. Now, also from the general journal, he has, this is a general journal. He bought stationery on credit from Joburg printers, an amount of 4,000 Rand, 1,400 Rand. We have to debit stationery and then credit Joburg printers. We open a stationery account, which is it's an asset. A stationery account is an asset, but once you use the stationery consumed is an expense. You have an asset which is stationary to the value of 1,400. You debit stationary and then you credit Joburg printers. Stationary 1,400. Joburg printers. Joburg printers 1,400. Then you have to credit Joburg printers. There's Joburg printers. How do we have a Joburg printers account here? We bought stationery on credit. Then you open a Joburg printers account in the ledger, in the general ledger. The debit side, the credit side. Joburg printers. What were we supposed to do? Credit Joburg printers. We debited stationery. My apologies. Already we have Joburg printers account already is opened here. And then the journal says, what's that journal? The journal say credit the station Joburg printers with 1,400. Joburg printers stationary. Stationary 1,400. This is the posting that we are doing. Credit stationary, debit stationary, credit Joburg printers. That's what we have done. There we are. We have posted it in here. Stationary, and the stationary account is, there is a stationary account with 1,400 in the general ledger of the business. We have done this. We have done this posting. We have posted all the credit, the journal from the fees journal and from the general journal. We posted them. Usually the posting is done at the end of the month so that you prepare a trial balance. They talk about the trial balance. The trial balance means that you extract the values of each and every account and you create a trial balance. You see an account like this one, a savings account. In the trial balance, it will have a savings value of 600 rand. The rental account, which is an expense, it will have 1,200 as a rental expense. Computer equipment, which is an asset, all assets have a debit balance, like our cash is a debit balance, and all expenses have a debit balance also. Computer equipment, which is an asset in the business, will have an amount of 3,000 rand. The wages account at the end of the month, your total wages for the end of the month, it will be 6,600 rand. 246. 600 goes to the trial balance. The way you balance your account, you do like this. You add the figures is 600 rand. And then you bring it on the opposite side. 600 rand. There's nothing in the wages, and it is balance. Brought down an amount of 600 rand. And then this 600 rand is the amount that you take this particular amount to your trial balance. They talk about the trial balance in your guide. That's how it's done. Even the fees. If you have the fees, it means that for the month, this particular month, the business has earned fees. 7, 12, 20, 22,000 rand of fees. Balance. brought down an amount of 22,000 rand. This 22,000 rand is an amount that appears in your trial balance. In your trial balance also, when you balance your books at the end of the month, you will have a creditor that you owe. You owe Joburg printers. The greater of the two is 1,400. You bring it this side, 1,400. You subtract the 500 is 900. Balance. Brought down an amount of 900 rands. It means that to your trial balance, you will have 900 rands carried into the trial balance. It's what you owe to Joburg printers. That's how you balance your accounts. You will have Omega Builders here. Omega Builders. Omega Builders, it's is your debtors. Omega Builders owe the business 4,000 rand. It's 8,000 rand brought down here. Balance. Brought down an amount of 4,000 rand. Omega Builders owes the business 4,000 rand. It goes to the trial balance. Mr. Apple owes the business 200 rands, 2,000 rand. The law library, it's an asset. We have an asset which is a law library with the books to the value of 2,000 rand. We have stationery on hand, 1,400 stationery. If we use stationery during the month, because this is an asset in the business, is stationery. If we use stationery during the month, supposing we use stationery to the value of 100 rands, then we will have 100 rands here. Stationery used. It means that now when you balance this, it's 1,400, 1,400. Minus 1,400 minus 100, you have balance brought down an amount of 1,300. You still have a balance of stationery in the business of 1,300, but you have another credit debit stationery used account. Stationery used account, it has 100 rands. It's an expense. Balance. It's from station. I beg your pardon. It's from stationery account. 100 rands. This is stationery. It's an expense. That stationery on hand. It's an asset in the business, but it's a consumable. You'll be consuming it during the month. An asset of 1,300 is stationery. 100 rands is stationery use is an expense. This is what you write off. You write it off your income. Your rent account, your savings account will remain a saving account, is a balance brought down an amount of 600. You take the 600, you take it to your trial balance. Rent account is an expense. This is what you write off against your income. Ladies and gentlemen, if I come to rent account, because it's a month of February, usually we do the write-offs and everything at the end of the year to determine the profit or loss of the business at the end of the year. But we do a trial balance quarterly, sometimes monthly, depending on the business policies as to when this is a rental account, but take into account this particular rent account. They paid rental for February, for February, March, and April. It means that 800 has been paid in advance. We can't say it's an expense. We still have to stay in that office building for another 2 months. The only expense that we have incurred is only the 400 for the month of February. The other 800 we have paid in advance. It's an expense paid in advance. It's an asset paid in advance. 800 is an asset here, and then 400 is an expense. The 400 expense is what you can write against income, and then the 800, we still have to stay in that in that office block for another 2 months. It's an asset. It's a expense paid in advance, and it forms part of what they call a current asset. It's a current asset. You may be able to balance your cash book. You may be able to balance your cash book and get as to how much is retained in the business. But there is one other exercise that I want to show you. If you could remember, we had the trust cash book. We had a trust cash book where we had capital, and we had a certain Mr. Apple, who paid for his divorce. He paid 10,000 rand. Mr. A. Apple he's a trust creditor. He's a trust creditor because he's a trust creditor. There he is. You see, we owe him 10,000 rand. We are holding 10,000 rand for him in the practice. The 10,000 rand that he deposited into the practice, that's the 10,000 rand in the trust. But at the same time, if you remember the fees journal, there's Mr. Apple. We rendered the service. We wrote a letter on his behalf, and we have earned fees. He owes the business 2,000 rand. The business hold 10,000 rand for him. Capital. In the business ledger, we have Mr. Apple. There's Mr. Apple. Mr. Apple's, we have rendered service for him for 2,000 rand. You see, he owes the practice 2,000 rand. We are holding 10,000 rand of his money in the trust account. Ladies and gentlemen, in the book, they talk about there's a certain concept of transferring value or money from trust into business. Like Mr. Apple, what needs to happen with Mr. Apple? Because we are holding, we can't be, he owes us 2,000 rand. But at the same time, while we are holding 10,000 rand for him, you see, the business has done legal work for him. He owes the business 2,000 rand. He's a debtor here. This side, he's a creditor. What needs to happen in this case? What needs to happen? We need to transfer value from the trust to the business. The value that we have earned is 2,000 rand. We have earned 2,000 rand for that month. We need to transfer this value from trust to business so that the business earns what is due to it. And the question is, how do we transfer this value that we have earned? Because we can't keep on holding money for the business in his trust account, whereas we have done work for it. The business needs to earn what is due to the business. The way it stands now, it means that there is business money held in his trust account. There is this money held in trust account. To transfer this particular value, there is a journal that we have to do, which is called transfer journal. We do a transfer journal. I'll use this to do a transfer journal. What do we need to transfer? We need to transfer from trust, and then we need to transfer to business. It means that Mr. Apple has to pay what is due to the practice. That's what we need to do. He owes the practice 2,000 rand. This is a debit side of the transfer journal, the credit side of the transfer journal. If you ask yourself, where does the value that needs to be transferred lie? The most important thing, you need to transfer when you are sure that you are holding enough money from the trust creditor. You are holding enough money in his trust so that he'll be in a position to pay the business. We are holding 10,000 rand. He owes the business 2,000 rand. He owes the business 2,000 rand. Now we transfer from trust, which is a credit. We transfer to business, which has a debit. Now what needs to happen? We have to debit Mr. Apple Trust. That's where you're holding value. It's credit. To transfer value from the credit side to the debit side, you debit Mr. Apple Trust an amount of 2,000 rand that he owes us. So you can't exceed that amount. That's what he owes us. And then you credit Mr. Apple business account an amount of 2,000 rand. That's how we transfer value from trust to business. And we call it transfer of value. You see, that's how we do it. You debit Mr. Apple Trust with 2,000 rand. You credit Mr. Apple business with 2,000 rand. We cut exactly what we have done. You debit Mr. Apple Trust with 2,000 rand. That's 2,000 rand. We debit Mr. Apple business 2,000 rand. And then you come to Mr. Apple business. There's Mr. Apple business. You say Mr. Apple Trust 2,000 rand. Now Mr. Apple doesn't owe us anymore. Can you see? He doesn't owe us anymore. What happens? It means that he owes us, his value is 10,000 rand minus 2,000 rand. But there's another exercise that we haven't done as yet. We have to do that particular transaction. You see, it means that his value is 8,000 rand. Now, what needs to happen after this transfer journal? Now you come to the trust cash book. There's your trust cash book. In the trust cash book, you issue a payment. You issue a payment of 2,000 rand. This particular payment, it comes out of the trust cash book. It goes to the business cash book. Transfer. Can you see that's the 2,000 rand? We were holding 10,000 rand. The holding is reduced to 8,000 rand. That's how you transfer value. If you between business and trust. This is an exercise I wanted to show you how you transfer value. We are going to do a lot of this going forward when we are doing conveyancing transactions. At least this exercise was meant to show you how we do fees journal. I've shown you the transfer journal. When you do the transfer journal, you compare the trust creditor, how much you are holding for the trust creditor in the trust account. You compare that against what he's owing you in the business account, and then you determine as to how much you have to transfer. And then you transfer with the transfer journal. After you have done a transfer journal, you issue a check out of the trust cash book where the money is held. It's transferred into the business cash book. The business has earned the 2,000 rand. It gets it 2,000 rand in the business cash book. That's how we do the transfers. As you could see, Mr. Trust, Mr. Apple Trust, we owe him 8,000. 10,000 less 2,000 is 8,000. And in the trust cash book, there's the 10,000 less 2,000. We're holding only 8,000 in his trust account. And the last leg of this issue was the business cash book has to receive from the trust cash book that amount of money, the 2,000 rand. It comes into business, 2,000 rand. It's from trust cash book, 2,000 rand. Trust cash book receive, the business cash book receives, it received 2,000 rand from the trust cash book. From the trust, we transfer money from the trust cash book of 2,000 rand into the business cash book of 2,000 rand. That's how we transfer value between business and trust accounts. Ladies and gentlemen, I'm done with this basic introduction to the general journal, the fees journal, the transfer journal. I've done only one transaction dealing with transfer journal. It's when you transfer between business and trust. I just wanted to show you these basics so that when we do other exercises, at least you are with me going forward. I'm not going to do the trial balance. It's not necessary. I don't think they'll ask you about they may ask you a question which is just you just answer questions without doing exercise dealing with trial balance or something like that. But they won't say prepare a trial balance for a business or anything like that. They wouldn't ask you that kind of question. But what I've been doing with you today is in your guide. They talk about the transfer, they talk about the fees, They talk about the trial balance. They talk about expenses. All expenses have a debit balance. All assets have a debit balance. And then income. All income, like fees, is your income for the business. It has a credit balance. And all your creditors, liabilities, have a credit balance. And the owner's equity, which is the capital, it also has a credit balance. Asset debit balance, expenses debit balance, liabilities credit balance, liabilities as in creditors, and your owner's equity, which is the capital that the owner has invested. It has a credit balance in the ledger of the business. Let's take a 5 minutes break, and we'll come back at 5:30. Then we'll do one of the exercises that we have done, one of the exercises that we have sent you. We ended on exercise 3 yesterday. I just want to page through the exercises and see which exercises we can proceed forward. Thanks very much. Just 5 minutes break. We are back here at 5:30. It's like 6 minutes break. It seems that I'm talking to myself. Are they hearing elsewhere?
Oh, they must be hearing.
Oh, right.
Yeah. I got it with their all muted.
All right. All right.
Until you-
Because, until we
invite
open it. Perhaps once I just want to do this exercise,
Okay.
and then we'll unmute them after this exercise that I'm going to do.
No problem.
Yeah, at least at 5:30, I can proceed with them with a new exercise.
No problem.
All right. All right. We are back again, ladies and gentlemen. We are doing exercise 11. It's a conveyancing exercise. We have done 3 bank reconciliation statement yesterday. I don't want to labor too much on bank reconciliation statement. You should be ready to tackle any bank reconciliation statement type exercise if you encounter in your test or exam. And here we are doing a conveyancing exercise, which is one of the exercises. If you could look at the marks, usually it carries 30 marks or so. Let's go through it. Mr. Lucky instructed you to transfer his house to Mr. Happy, who has purchased it. Ladies and gentlemen, at the end of this exercise, you'll be unmuted and perhaps you may ask questions relating to the first exercise that we have done and then this exercise. And after that, we mute because yesterday it was a disaster. Some of you, unfortunately, were having interference from the background. The purchase price is 300,000 rand. The purchaser is to pay a deposit of 100,000. You are required to invest the deposit in an interest-bearing account for the benefit of the purchaser. The balance of the purchase price is guaranteed by ABC Bank against registration of a mortgage bond. The purchaser is also liable for payment of all transfer costs. Transfer costs being the transfer duty if there are duties payable, and the cost of the conveyancing cost also. Mr. Happy pays the deposit of 100,000 rand. Immediately you receive money into your practice from a client. It is the trust cash book. When we receive this amount of 100,000 rand from Mr. Happy, we're going to open the trust cash book, the credit side, the debit side. Still the double entry system is Mr. Happy Trust. Mr. Happy Trust account. We receive 100,000 rand. Once you receive in your trust bank account 100,000 rand, you have to open Mr. Happy Trust as a trust creditor. We debited the trust cash book receiving 100,000 from Mr. Happy. Mr. Happy becomes our trust creditor, and then it's from bank or trust cash book, an amount of 100,000 rand. That's what the transaction says. Ladies and gentlemen, if you look here, the purchaser is to pay the deposit of 100,000. You are required to invest the deposit in an interest-bearing account for the benefit of the purchaser. And the balance is guaranteed by ABC Bank against the registration of the mortgage bond. The purchaser is also liable to pay all the transfer costs. Now that we have received the money from Mr. Happy, we have to, they say we have to invest this money on behalf of Mr. Happy. We have to invest it on his behalf. And then he has to earn the interest on that amount. According to the Law Practice Council, this involves it's a Mr. Happy. Mr. Happy, it's a section 86 for investment for Mr. Happy with a certain bank. I don't know which bank, B bank or something like that. What happens is that since we received this 100,000 rand, when we invest it, we issue a payment out of the cash book to a section 86 for investment for Mr. Happy of 100,000 rand. You credit the cash book, you credit an investment account for Mr. Happy, a section 86 for account. A section 86 for account is from the bank or cash book, trust cash book, an amount of 100,000 rand. You credit Mr. No. You credit the trust cash book, you issue a payment of 100,000 rand, and then you debit Mr. Happy Trust investment account. It's called a section 86 investment account with 100,000 rand. We're still holding it, the money, not in the ordinary section 86 trust cash 86.2. We are holding it for investment because this one usually he will be earning a higher interest rate in this account. That was the second sentence. You are required to invest the deposit in an interest-bearing account for the benefit of the purchaser. That's the section 86 for investment. The purchaser pays the check of 8,000 rand for the pro forma cost. He pays 8,000 rand for pro forma cost. Those are the costs for the transfer and perhaps transfer duty. In the trust cash book, we receive an amount of 8,000 rand. It's from Mr. Happy Trust. 8,000 rand. And then that's the amount we received. A check in the form of a check or an EFT, 8,000 rand from Mr. Happy in the trust cash book. We debit the trust cash book. We credit Mr. Happy Trust with a bank trust cash book or trust cash book, an amount of 8,000 rand. An amount of 8,000 rand. This is the second transaction. The purchaser pays a check of 8,000 for the pro forma cost. This is to accommodate the cost of the transfer and perhaps transfer duty. You pay the transfer duty for 3,500. Ladies and gentlemen, just note one important issue here. When we pay for those costs, we pay them out of the business bank account. We don't pay out of the trust bank account. Though he's giving us, we've deposited in a trust bank account, but we pay it out of the business bank account. Business cash book or bank account. They say we pay a transfer duty of 3,500. We debit the business cash book by debit. We credit the business cash book by debiting Mr. Happy business account, ne? Business account with an amount of 3,500 for transfer duty. 3,500. And at the same time, while doing this, we'll have an account in the business ledger, which is Mr. Happy business account. The credit side, the debit side. We paid for him an amount of 3,500 out of the cash book, which is credited. And the payment for transfer duty was paid for Mr. Happy. Hence, Mr. Lucky, sorry. My apologies, ladies and gentlemen, Mr. Lucky. Business cash book. From the business cash book, we paid 3,500. He's a debtor in our business ledger. It's from the business cash book. 3,500. Mr. Happy, Mr. Lucky. Oh, no, we're on the right track. The ABC Bank gives you a guarantee of 200,000 rand. ABC Bank gives you a guarantee of 200,000 rand. There's no flow of money. What the bank does, it just guarantees that on the date of registration of this particular property, they will pay 200,000 rand to the seller, Mr. Lucky, on registration of a mortgage bond by Mr. Happy over the property. Nothing happens in here. It's just a guarantee. It's a letter of guarantee from the bank that on registration date, they'll pay that amount of money. Your bank advises that the check for 8,000 rand from the purchaser has been dishonored. That payment that we received from Mr. Lucky has been dishonored. That's the amount in the trust cash book from Mr. Happy, 8,000 rand that we received has been dishonored. What do we do? Because this amount has been dishonored, we say dishonored payment or an EFT of 8,000 and we cancel it. If you write it on the opposite side, it's cancelled. There's no, you cancel it by writing on it. And then this is Mr. Happy, 8,000 Rand. Originally, we had Mr. Happy Trust credited with 8,000 Rand. With 8,000 Rand. Now we also have to do the same. From the trust cash book, that dishonored 8,000 Rand. It canceled that amount. The amount is cancelled because it has been dishonored. Now, Mr. Happy, after that dishonored payment, on the 21st, he pays 8,000 Rand in cash. 8,000 Rand in cash. As we know, this particular 8,000 Rand, if you look at number 5 there, the purchaser pays a check for the pro forma cost. Which are the pro forma costs? Those are for the transfer duties and for the legal fees for transferring, conveyancing fees for transferring the property. Already we know that out of the 8,000 Rand, 3,000 Rand goes towards transfer duty. Now we receive 8,000 Rand in cash. Because we have paid for Mr. Happy out of our business cash book. We have paid for him out of our business cash book earlier. We have to receive some of this amount, the 3,500. 3,500 of what we've paid towards transfer duty. We receive in our business cash book. This we receive from Mr. Happy. In the business cash book, we receive an amount of 3,500. We received an amount of 3,500 from Mr. Happy. We can't receive it in the trust cash book because already we have paid 3,500 for him. We have paid 3,500 for him, hence we can't receive it in the trust cash book. This is part of him settling his due with us. Hence, we're going to open a Mr. Happy business account. Mr. Happy business account. Mr. Happy business account, he paid an amount of 3,500 into the business cash book. Cash book. He paid 3,500 into business cash book. The balance is 4,500. The 4,500 of the cash. The 4,500 of the cash, we can receive it in the trust cash book. We can receive in Mr. Happy trust cash book. Hence, we'll have Mr. Happy trust. 4,500. We debit Mr. Happy, we debit the trust cash book the part of the receipt, we receive 4,500 in the trust cash book. And we credit Mr. Happy Trust Bank or Trust Cash Book 4,500. That's how we do it. 4,500, we receive it into the Trust Cash Book, the 4,500 into Mr. Happy Trust. We are holding 4,500 for him. This will carry, it will be for the cost of transfer because transfer duty has already been paid. That's why we have recorded the figure for transfer duty in this account. Mr. Happy and Mr. Happy business account. 3,500 is credited, and the trust and the business cash book with 3,500 because we have paid for him. We can't carry him for a long time because the money is there. They say the transfer and the bond are registered. The interest on the investment is 1,400. You debit your fee and account to Mr. Lucky for the purchase price and Mr. Happy. They say record the transaction in the appropriate books of prime entry and the ledger. Fees are to be debited when due and transferred at the end of the month. Make provision for VAT at 14%. Now that the transfer has happened, they say the transfer and the bond are registered on the 25th. The interest on the investment is 1,400. You debit your fee and account to Mr. Lucky for the purchase price and Mr. Happy. Ladies and gentlemen, they say the interest on the investment is 1,400. Here is the investment account. Mr. Happy's investment account, a Section 86 investment account. When we receive this amount of money, what happens is that we receive an interest of 1,400 on this particular investment. What happens? It means that we cash this investment. How do we cash this investment? We cash this investment by transferring it back to the trust cash book. We go to trust cash book. We transfer an amount of 100,000 rand. In the trust cash book for Mr. Happy again, it means that this account is closed, but we're still going to deal with this account is closed like that, but we are still going to deal with the interest. We'll come to the interest. Here we receive from the Section 86 for investment. We received 100,000 of Mr. Happy again. We debit the trust cash book. We credit the investment account. Debit the Section 86 for investment. And then you credit the trust cash, the Mr. Happy Section 84, Section 84.6 investment account. That account is closed. But at the same time, when we withdraw this money from the investment, we also receive interest of 1,400. Ladies and gentlemen, according to the Law Practice Council, any trust creditor who you as a practitioner invest money for, usually the money that we hold in trust, in a Section 82 trust account, trust cash book, usually that money in the trust cash book is payable to the legal practice fidelity fund. Interest that is earned on a trust cash book, which is called the Section 86 2, according to the Legal Practice Act, is payable to the Legal Practice Fidelity Fund. But sometimes a client say that invest this money specifically so that I earn interest. I can't be investing this money with the intention of buying property and then interest, if we keep it in this 86.2 Section 86.2 account, is going to the Legal Practice Fidelity Fund. He say, I want to earn interest on that account. The rule says that the interest that it's earned from a Section 86 for investment, if you read your guides that has been given to you, it means that out of the interest that you earn, 95% is payable to the trust creditor, and 5% of that interest is payable to the Legal Practice Fidelity Fund. Hence, out of the 1,400, we have to calculate what is 95% of 1,400. 95% is payable to Mr. Happy, and the other 5% balance is payable to Legal Practice Fidelity Fund. The 5% of 1,400 is 70 rands. This means that Mr. Happy Trust gets interest. We receive it into a bank account, an interest of 1,1330. That's the amount. That's 95%. My apologies, ladies and gentlemen. The interest is 1,400. And Mr. Happy Trust, he earns interest of 1,330. Out of that 1,400 that is deposited into our bank account that we receive, 1,330 goes to Mr. Happy Trust. $1,330, the difference is 70 rands. And Legal Practice Fidelity Fund earns the difference. That was 1,330, which was earned by Mr. Happy. And the balance of 70 rands, interest of 70 rands. The 70 rands interest, it goes to the Legal Practice Fidelity Fund. Trust cash book. in the trust cash book. Also the interest here, trust cash book. We deposited 1330 plus 70, it makes 1400. That particular 1400 is debited there in the trust cash book. 1400 is made out of 95% that goes to Mr. Happy in the trust cash book, and 70 rand, it goes into the trust cash book. But this interest, you see, it means that this money is owed to the legal practice fidelity fund. 70 rands, which is 5%, goes to the legal practice fidelity fund, and Mr. Happy gets the 95%. That's how the interest is accounted for. This account is closed. This account is closed. And then this one, we're going to issue a check to the legal practice fidelity fund at the end of this exercise. I'll show you how that one is done. We have accounted for the interest. We have received the investment back. We have received the interest into the account. And now what is next? The bank, the difference for the bank. The purchase price was 300,000. That was the purchase price. The balance has to be 200,000, which we received a ABC bank guarantee of 200,000. When it's the property is registered, we receive an amount of 200,000 rand. We receive it on behalf of Mr. Happy Trust. This is the amount that we receive from ABC Bank. But we receive this particular 200,000 rand on behalf of Mr. Happy. We debit the trust cash book. We credit Mr. Happy Trust. Mr. Happy Trust, because we receive the money on his behalf. Trust cash book, the guarantee being paid. An amount of 200,000 rand. An amount of 200,000 rand has been received into our bank account for and on behalf of Mr. Happy for the purchase of that property. That's why we have credited Mr. Happy Trust, because this money has been received on behalf of Mr. Happy so that he should be in a position to purchase that particular property. Now, ladies and gentlemen, we have to look at Mr. Happy Trust in our ledger. Mr. Happy Trust in our ledger, if we were to balance this ledger account, ladies and gentlemen, there is one other key important thing that I need to highlight to you. There is a statement that we have to take into account. They say the purchaser is also liable for payment of all transfer costs. He is liable for all payment of all transfer costs. Let's account for those transfer costs. Already, part of the cost of transfer, we have accounted for transfer duty. Now, we have to account for the transfer fees. It means that we, as a conveyancing company, we are entitled to the fees. We are entitled to the fees for transferring the property from Mr. Lucky and transferring those fees and preparing the document and transferring them to Mr. Happy. In this case, because we are going to earn fees as a practice, what is involved is a fees journal. We have to do a fees journal. Then we come to the fees journal. Here is our fees journal. We open a fees journal because to earn fees as a practice, fees journal. The transfer costs are to be carried by the purchaser, Mr. Happy. We debit Mr. Happy. This is the debit side and the credit side. We debit Mr. Happy. Mr. Happy business account. The business is earning the fees. That's why we debit Mr. Happy business account. Business account with the fees of 4,500, if you could remember. The difference between 8,000 and 3,400. We debit Mr. Happy business account with 4,500. We credit the fees that we earn. Ladies and gentlemen, there's something that I haven't accounted for. They say we should account for VAT at 14%. We should make provision for VAT at 14%. What we need to do, those fees of 4,500, we have to add VAT, but for practical purpose, VAT is 15%, which is 675 rands. The fees that we earn as a practice is 4,400. And then out of the 4,500, the VAT on those fees, VAT is value added tax is 675. 675. I use 15%, ladies and gentlemen. And then we debit Mr. 4,500 plus 675. It gives me that we debit Mr. Happy with 5,175. Transfer fees plus VAT. Transfer fees plus value added tax. VAT 675, fees 4,500. And Mr. Happy, $5,175 for Mr. Happy.
Noah's Ark Adventure.
And from the fees journal,
It's rain.
we have to transfer the figures from the fees journal. We transfer them to the ledger. The way they are, we have to post them. You remember this?
Simon, you are muted.
Your mic, Simon. Your mic, Simon.
You're
Your
muted,
mic.
Simon. We can't hear you.
Oh God.
I wonder if you can hear us, Simon. You are muted.
Simon, please unmute your mic. Simon.
My apologies. I understand I was muted.
Yes.
I may come back to the fees journal again and say that it was a mistake. My apologies. The mouse was in the way. They say we have to account for VAT. Fees are to be debited when due and transferred at the end of the month. Hence, Mr. Happy, we debit him with 5175. We credit the fees with 4,500. VAT with 675. Now from here we post to the ledger. When we post to the ledger, we come to Mr. Happy business ledger account. We debit Mr. Happy with 5175. That's the amount. And then we credit fees account with 4,500. Mr. Happy business account. The fees are credited with 4,500. And then the VAT account is credited with 675. We credit the VAT output, Mr. Happy fees, 675. Exactly the posting as it happens. We debit Mr. Happy fees, Mr. Happy business with 5175. And you credit the fees account. You credit the fees account with 4,500, the fees account, and then you credit the VAT output with 675. This is the amount, you see, it's on the credit side, is the amount that we have to pay to SARS, South African Revenue Service, 675. We owe them 675, and the businesses earn the fees of 4,500. And Mr. Happy has been charged 5175, which is the fees including VAT, transfer fees plus VAT. Now, after those postings, we look at the Happy Trust account. He's purchasing a property for 300,000. We have to add all these figures and check in his trust whether we have enough money to pay the seller. We have to check if we have enough money to pay the seller the purchase price. We have to add all these figures and get the differences. 100,000 plus 8,000 plus 4,500 plus 1,330 plus 200,000. It gives me 313,830. 313,830 less 8,000. It gives me 305,830. It gives me 305,830. It means that he has 305,830. He has enough money to pay the seller that amount, what is due to the seller. He has enough money, which is 305,000. This amount is 313,830. It's 313,830. 313,830 minus the 8,000. It means that he has 305,830 as reflected here. It means that he has enough money to pay for the transfer of the property. Now what needs to be done is to make sure that we transfer the figures to the people who are entitled to. We have to open another account. This particular account, who is selling the property is Mr. Lucky. We open a Mr. Lucky Trust. trust account. We have to open a Mr. Lucky Trust account. He's selling the property for 300,000 rand. Ladies and gentlemen, the person who has money in trust is Mr. Happy Trust. Mr. Happy, this trust account. This trust account. Mr. Happy is supposed to buy the property from Mr. Lucky. The property is valued at 300,000 and that's the purchase price. Now that Mr. Happy has enough money, which is when I take this 313, I subtract the 8,000, I add with 305,000 or so. During the transfer, it means that money has to be transferred from Happy Trust and transferred to Lucky Trust to pay for the purchase price. To transfer from Mr. Happy Trust to transfer to Mr. Lucky Trust, we have to use a trust journal. We have to use a trust journal. The trust journal is used to transfer money from different trust accounts, from one trust account to the other trust account. This is a trust journal. That's the trust journal. That's the debit side of the trust journal, the credit side of the trust journal. The buyer has money in his trust. Here is the buyer. He has money in his trust. He has money in his trust. He has to pay the seller. He's entitled to this money for now. But by virtue of the properties transferred to him, he has to transfer the money to the seller. How does he transfer the money from the purchaser to the seller? We debit Mr. Lucky Trust, Mr. Happy Trust in the trust journal with 300,000 rand. And then we credit Mr. Lucky Trust 300,000 rand. Transfer of purchase price. Is a transfer of purchase price from the buyer, the purchaser, to the seller. Immediately after doing this trust journal, it's done in the trust journal. We say we debit Mr. Happy Trust, who's the buyer, who has the money, and then we credit Mr. Lucky Trust, who's selling the property, 300,000. And then we come to Mr. Happy Trust. We said that we debit Mr. Happy Trust with 300,000. Here is Mr. Happy Trust. He has money in here. We debit him with 300,000 rand. by writing Mr. Lucky Trust. 300,000 purchase price. That's a 300,000 rand. It comes out of the Happy Trust. It comes into Mr. Lucky Trust. Mr. Lucky Trust is credited. With the purchase price. Mr. Happy Trust is credited. Here is Mr. Happy Trust is credited with 300,000 rand. We debited Mr. Happy Trust. Mr. Happy Trust is credited. Mr. Lucky Trust is credited with Mr. Happy Trust. A trust journal, ladies and gentlemen. We have transferred the purchase price to Mr. Lucky. It means that the money that we hold in the trust cash book doesn't belong to Mr. Happy anymore. It belongs to Mr. Lucky. That 300,000. It belongs to Mr. Lucky. Now, because we have transferred, what needs to happen? The most important thing is that from the trust cash book, we have to pay the seller. How do we pay the seller? By doing an EFT, we pay Mr. Happy. Out of the trust cash book, we issue a check previously, but now an EFT. We issue a EFT to Mr. Lucky, Mr. Lucky Trust. We pay him 300,000 rand, the purchase price. The purchase price we pay Mr. Lucky Trust. We go to Mr. Lucky Trust, we issue a payment. We come to Mr. Lucky Trust. Mr. Lucky Trust gets his money, 300,000 from the trust cash book. That's the purchase price. We've paid him, we don't owe him. We've paid that gentleman, we don't owe him. There are other important aspects that we need to deal with. Already we have dealt with the purchase price. We have paid Mr. Lucky out of the account. The other important aspect is that there is money that is held in the trust account. If you remember, ladies and gentlemen, there is this 4,500. That 4,500, it was transfer fees. Those transfer fees are due to the business. The transfer fees are due to the business, but they are sitting in the trust cash book. They are sitting in the trust cash book. Now we have to transfer the value. Let's look here. I just want us to calculate the figures here. Just to balance this account, we know as to how much is left in this account. It was 313,830 minus 8,000 minus 300,000. We're left with 5,830. There's an amount of 5,830 remaining in the Happy Trust account. Who is the purchaser? And then Mr. Happy Trust, Mr. Happy, in the business account, look at Mr. Happy business account. Mr. Happy in the business account, in the business ledger. This is the business ledger of Mr. Happy. Mr. Happy in his business ledger, he has two sides there. He has 5175 and also less 3,500. Let me just see. Ladies and gentlemen, I need to reconcile the Happy business account. Reconcile this figure in the Happy business account. He owes us 5175. And with his interest. Ladies and gentlemen, I'm still digesting this. We have paid the seller, and then there is Mr. Happy Trust. There is money remaining in Mr. Happy Trust account, which is close to 500. Let me just check the value there. Which is 588 is remaining in his trust. But there is also an amount that he owes the business for fees and VAT, which is 5175. Ladies and gentlemen, there is when the business, ladies and gentlemen, I just want to bring something to your attention. Here, on the 9th, we paid transfer duty of 3,500 out of the business account. Do you remember? Out of the business account, we paid 3,500. Out of the business account, we paid 3,500. This is the amount that we've paid. We paid 3,500 for Mr. Happy. When we paid out of the business cash book, Usually we pay 3,500 for Mr. Happy. This amount of money we debited. It's a cash transaction.
Mr.
We
Simon,
debit-
I don't know if
Sorry,
you can
Simon.
hear us.
The business cash book. We have to credit
Can't hear.
business cash book again here. We can't just pay for him. Business cash book.
Okay, he's correcting the entry.
An amount of 3,500. An amount of 3,500. We paid for Mr. Happy for his transfer duties. When we were paying transfer duties, we were paying them on behalf, we're incurring a disbursement on behalf of Mr. Happy, an amount of 3,500. I didn't credit this account, ladies and gentlemen. I didn't credit this account. Do you? Because it's before this, before he gave us the cash. Before he gave us the cash. This was when he gave us the cash of 8,000 rand in cash. This is the 8,000 rand he paid in cash. That's why it comes in here. But here, when we paid for him, I debited the cash book. But I was paying this out of the business cash book. We were paying for Mr. Happy. Hence, we were creating him as a debtor for us. Also an amount of 3,500. He has to carry the full 8,000 rand plus the VAT on that amount. The transfer duty doesn't carry VAT. This is one area that this is one mistake that I have made. I haven't debited him, Mr. Happy. Ladies and gentlemen, you'll excuse me. I did it on another sheet.
Mr. Simon,
There's business cash book.
I think you need,
And then I open another
Mr.
Mr.
Simon?
Happy here. That's why
that's,
I was surprised what happened to it. I didn't account for
Mr.
it.
Simon can't
I
hear
was supposed
us.
to use this sheet,
I think that we
but
are
I
muted
opened
to
another
him.
Mr. Happy account. That's a mistake. I'll put it aside, but here it's accounted for on this sheet. Mr. Happy, business cash book. That's when we paid for him the transfer duty. That's a transfer duty. Now we have to balance everything. We have to balance Mr. Happy business account, and also I found it. I found it. Yes. There's Mr. Happy Trust. We have to compare Mr. Happy Trust account with Mr. Happy business account. Let me do the calculation in Mr. Happy business account. 5175 plus 3,500 is equals to 8675 minus 3,500. 5175. There you are. Ladies and gentlemen, in Mr. Happy Trust, we have 313,830 less 300,000 less 8,000. I'm left with 5830. The balance is 5830 here. 5830. In Mr. Happy business account, I'm left with 3,500. In Mr. Happy business, that figure I haven't accounted for over. This is a figure I haven't accounted for. 3,500. When we were paying for him, we were creating a data in our business. That's the amount. And we charge him fees of 5,175. Fees of 5,175. Now we have to calculate the amount that we have in our trust cash book and see what the balance we've got so that we could pay business from trust account. This is a trust cash book. I'm going to balance this two sections and check as to how much money is still in the trust cash book and who do we need to pay. I know we have already paid the seller. Calculating the debit side of the trust cash book, I have 100,000 plus 8,000 plus 4,500 plus 100,000 plus 1,400 plus 200,000. I've got I've got an amount of 413,900. 413,900. The money that is held in this account ladies and gentlemen, I have to pay. There are people who we are supposed to pay out of our bank account, the trust cash book. One such account is that interest that goes to Legal Practice Council, Fidelity Fund. Legal Practice Fidelity Fund, 70 Rand interest we have to pay to them. Okay. We're going to issue a check to the Legal Practice Fidelity Fund, an amount of 70 rands. Out of the trust cash book. No, ladies and gentlemen, let me not do it like this. Mute. Ladies and gentlemen, you have been unmuted. Are you there? Hello?
Yes, hello.
Yes, you're still
We are
here.
here.
Yes,
Yes, we are here.
Yes, Mr. Makola.
Hello, are you? I've asked Mr. K. Malema to unmute you. Ladies and gentlemen, are you there?
Yes,
Can
we
you
are.
hear me?
Yes,
Yes.
Yes.
We are here.
Yeah.
Yes, we are here.
Hello? Can you hear me?
Yes.
Mr. Malema, I can't hear them. I can't hear them. There's no sound.
We know we can hear.
Hello, can everyone hear me?
Yeah, we can.
Yeah, I'm in my office and I'm trying my best to. I can hear you. Apparently, he cannot hear you.
Yes.
Yes. Simon cannot hear us.
Yeah, I've opened everything. He's on unmute, and then I can hear you. And then I don't know what else was I do. Please assist me.
I think perhaps his computer speakers, the volume is turned down.
Okay, let me check his computer speakers. Thank you very much. I'm rushing.
Mm.
They can hear from that side. You can't hear them.
You see, yesterday when I took the
So is he talking?
hear me, and when I took out the mic there, they could hear me, but it was down there. I could hear the voice down there. I couldn't hear them here or anything. And then I took a mic out of the top one. I don't know which one was it. Hello, ladies and gentlemen.
Simon.
Can you
We
hear
can
me?
hear you now.
Hello.
And we are left with.
Hello.
Hello.
Hello. We can hear you.
Hello, ladies and gentlemen. Can you
Hi,
hear me?
Simon.
I can hear you.
Hello.
Yes, we can.
Yes,
So-
we can hear you.
I apologize. Sorry for the still an issue of the connections and everything, but you were muted so that we could proceed without any interruption. And I'm not sure because I got stuck at the end. I'm trying to find out where exactly did I go wrong. I'm not sure if there is any one of you who's aware what is happening.
I think it's because you opened two bank account business accounts, Simon. That's where you missed it.
The business account.
Yes, you opened two business accounts. That's where you missed it.
two business accounts. What do you
For Mr. Happy, you
For
opened
Mr. Happy.
two accounts for Mr. Happy.
Happy
The
business
one had the
account?
3.5 and the other had the other two
Yes.
entries.
Yes.
Could you repeat that? I didn't hear you.
You had two business.
it's
You had two Mr. Happy
Hello.
business accounts.
Hello, Happy. Hello, Mr. Happy.
Yes, maybe Mr. Happy
It's the
trust
cash
account.
book and the ledger.
Hello.
They are not. It's a cash book and a ledger.
They will be unmuted based on our raising of hands.
Yes, ladies and gentlemen, I did open two Happy business accounts. That's why if you look here. That's why I corrected it here. This was a Happy business account that I opened because I wasn't aware that I opened that account. That's why I've corrected it by opening it here. So that this is Happy business account. The fees is 5175. And then we paid for them for the transfer duty 3,500. Ladies and gentlemen, we are left with around about 7 minutes to complete the exercise. And then, can you bear with me? I will complete this overnight, and then tomorrow I'll come and finalize this account.
Okay.
Hello, sir. Hello.
Tomorrow I'll come and finalize this particular exercise just to do the final balancing act, because I see I opened two business accounts and then something went wrong there. But were you with me following the process the way I approached it?
Yes.
Yes.
Okay.
Yes.
Simon,
Yes, definitely.
Hello, Simon.
do we not
Hello.
transfer between the business ledger, that 5175, and Mr. Happy's trust account 5175, and then the difference we have is 675, but remember we took it at 15% VAT. So that's the 20 Rand difference we got, and then we balance out.
It balances out. Could you repeat that?
So if we look at Mr. Happy's business ledger, he's sitting with a balance of 5175. That was that one you messed up on and then you corrected it. So if we take that 5175 from the business ledger and do the transfer to Mr. Happy's trust ledger, the 5175.
Yes.
Okay, because we're out there by 5830 minus 5175, it comes to 655 Rand, which is basically the VAT output less between the 15% and the 15%, which is your 20 Rand difference.
All right. Let me look at it and see where I may have went wrong.
Okay.
But we are almost there. Most of the steps that we followed the right steps. This issue of opening two business accounts, I wasn't aware that there was another business account. That's what the mistake. But by tomorrow we'll start with it, and then we'll go to the next exercise.
Hello.
How did you find the first exercise today?
Sir, may I please ask? Hello, sir.
Yes.
Could we please get the answers for the exercises we haven't gone through so that we can compare when we do the exercises ourselves?
The exercise that you didn't go through.
Yes. Could we get the answers for those exercises? Yes, sir.
Yes, I will work them out. I'll work them out. Yes.
Okay, thank you, sir.
But the first one that I did, the exercise, the double entry system, where Mr. Long Arm was opening a business and anything. Has anyone got questions on that one?
No. Hi, Simon.
Yes.
No.
Just a quick question. I noted that you didn't insert the drawings or noted in the capital. Is there a reason?
Yes, drawing, it will remain an account until the end of the year when you account for expenses. then you withdraw it from capital. It will reduce capital.
Okay.
At the end of the financial period, like at the end of the period or the year, you subtract drawings from capital to reduce your capital holding.
Okay.
Any other question?
Hi, Mr. Simon.
Yes.
Mr. Simon, I just want to say for the long arm exercise in the fees account, to put 22,000, the actual answer is 11,200.
I can't hear you.
Hi, Mr. Simon, can you hear me?
I can't hear you.
Simon.
Mr.
Yes.
Simon.
Hello, Simon.
Yes.
Simon.
The last
Yes, I'm listening.
you can provide
Can
us
I just
with
ask quickly?
the answer. All the
yes. Tomorrow,
Hello,
when
Simon.
I'll start with this particular exercise. I shall have it typed, and then I'll indicate as to where we went wrong. Okay. But
Definitely we can be interactive tomorrow.
Yes, tomorrow we'll start with this exercise just to finalize the last part of it. To reconcile the trust account and the business cash book, so that we see what to whom.
Mr. Simon?
Yes.
Is it possible for us to get the model answers for the question so that we can work through them tonight and then come back tomorrow with a better understanding?
Model answer for the question, which one?
The question that we've just gone through, sir.
He still needs to go through it.
I'll give it to Dorcas tomorrow, and she will send it to you.
Thank you so much.
Simon, sorry, I just want to jump in here. Is it possible for us to get the module answers for the other questions as well? Some of us finished that bank reconciliation questions from question 4 until question 7. So will we be getting those answers or not?
I can do the answers, but I would prefer working through them with you rather than the answers. We need to work together so that you know how we got to those answers rather than give them to you.
Okay.
If you don't have time to accommodate that, then I'll arrange the answers for you. For the
Okay, 100%.
Yes.
Thank you very much.
Yes. Ladies and gentlemen, hey, I didn't know that this exercise is so long. It's already 8 o'clock. And then I'll see you tomorrow.
No, only break is 15%.
Good night.
Night.
Good night.
Thank you.
Good night.
Night, Simon.
Good night.
Night.
Good night.
Yes. Bye-bye.
Thank you, sir.
Bye.
lagi online class zeker. Moet wel maar warm. Nu staat ik naar de online class. Kibu. Eh? Ki connected with the virtual class. Recebe trabalhar. Interessant. Eh? Kijk hier. Ki er zijn ke ile ka maoto mare ba ikutlwa ka koloi ko na class e tswang ka 8 kala ka 5 e tswa ka 8 ho ile no fit it down